Good afternoon, all. CamelbackTrading.org coming to you this Tuesday afternoon, July 21st, and we are looking at the market profile of the SPY ETF here on Window Trader. And bizarre day again. I had a poor day. I'll explain that all in a minute. When you do silly things, you deserve silly things to happen to you, and then when you have a chance to get out of it, and boy did I have a chance, and then I did a huge blunder which cost me big time, and we'll go over that. I don't wish that on anybody. So again, we had a price probe yesterday. We gap higher into that huge gap last night, and I think I said this on the video this morning. Somebody said that gap's going to fill easily. I said there's no way it's going to fill easily without a catalyst. Well, forget about it filling easily. We only filled it by $1 and change. It's still over 500 ticks. And we fill today's gap and go out with a price probe. Every price probe recently has gone the way of the probe. So yesterday we probed higher, we gapped higher, yet the gap has never held recently. So it's really bizarre. For a while, price probes were being disregarded and they would open the next day and be rejected right away. But they've been accepted the next day. Yet the gap that they come out of has not been. Very bizarre. We end 10 wide. That couldn't be lowered. That's a little nuance. Yes, the market closed very ugly. NASDAQ closed just off its lows. But value was higher all day. We could not lower the POC. We end 10 wide. We started, I think it was 8 for 8 wide. We actually, here's the funny thing. We actually raised POC before that sell-off. So, right, it ends up at K's low. So that's a real bizarre thing. And I'll go over everything I did in a minute. But that's why until they prove tomorrow, remember, there were a lot of things here that buyers you could use to defend. We lost 2 of them. We lost the probe and we lost 1 set of single prints. But there's still a lot of ammo here. Well, now the sellers have their own ammo. So it'll be interesting to see what happens tomorrow. Right? Is it going to be M period again? Is it not? We'll see. So today early, I didn't do anything right away, but I did take a put play when we got below the opening because we had a lot of trouble below the opening in A period. So we had a failure in A at the opening, took it down for some. It was the 328 put. So I took the 328 put against the day's, just picked the 328 put. I was going to do the 330. That expired. Initially, I said that, but these were cheaper. I saw the lack of tempo, so that's why I went with those. If the market had ripped higher and I decided to take a put, then I probably would have stuck with the 330s. So I bought the 328 puts. Turned out to be a nice trade. And these trades were in my trading account. And then in B period, I took a long versus the opening, which worked out. I took the 326 call. It worked out. Made some on that. So then I switched over, for whatever reason, to the IRA early. And this is where I got hurt. I played big. I played huge. And I'm going to show you what I did. Now, I think the reason behind the trades weren't bad, but the type of day we were having should have led me to be a little more skeptical that I would get what I wanted when I did them, at least initially. So C period, we come down now, right? We're one time framing down, and C takes out B's low. I'm like, well, the odds of filling this gap now, because they have been filled a lot of times, are pretty good. If the market's that strong, we shouldn't one time frame down in B period. Not only did we do that, we started one time framing down in C period, right? So I took a size put play. Bought the 327 puts. I bought about 200 of them. And no sooner did I buy them, it just started going back up. Got above the opening. I said, forget it. I'm out. Took a pretty sizable loss there on those. Then in D period, D opened. Got to within a tick of C's high. It was holding the opening. I'm like, all right, we're back and forth through the opening. But the fact now that we will one time frame down twice, we're back above the opening. Maybe that's all sellers want to do. We should at least pop A and B and see what I get above that. So D came down around the opening, and I got long some size calls. The 327 calls. These are all tomorrow's expirations. Well, lo and behold, D flushed out. And it is not this was certainly not the right trade. I don't mind what I didn't see. I did that trade. I thought it was a decent trade. This was now, I doubled up. So I was long 1,000 calls of the 327s. And luckily, it stopped on a dime and basically ripped right back up. And I took them, got it back above the opening. I held on to about 300 or 350 of them. I kept battling the opening. And then finally started to come back in. I took the rest off. Got back a lot of what I was down in C. And remember, I was down a lot on the first 500. But I was still down on the day. So, F period. I'm sorry I'm looking at them because I think these are important. I'm trying to teach my trading room. This is a day of chop. This is a day of indecision. Right? Back and forth through the opening, 9 time frames or 10, right? 9, I believe. FG, H&M didn't go back and forth. But 9 out of 13. That's total lack of conviction. The ES had a poor high. We didn't. We had poor lows for a moment. I mean, there was just no conviction either way. Now, so I'm trying to justify to myself why I took the size of those trades because I wasn't looking for a lot. I was looking for the gap to fill. That's why I took that 200 lot. I was looking for just to pop A and B, see what we get above it a little bit. Not saying that was right. This add-on, that was pure, I guess you could say luck at the time that it didn't go and take out the day's low and we rallied. So then in F period, so now I got back 3/4 of my loss. All right, I'm only down 1/4 of what I'm down on the day, and it was a pretty sizable loss to start. So then F comes down, takes out, E's low. I'm like, and it's sitting here. So once again, I did the same thing. I bought size puts. This time I bought the 326 puts. They were a little cheaper. They were barely in the money. I'm like, well, all I want is the gap fill. Well, guess what? It didn't fill. Went right back up and got out of them. And now I'm down a lot again. So I wasn't down as much as I was earlier, but I was still down pretty big. And then the trade that really blundered it all, I watched I, I watched J. I was like, well, we're back up here again. I wouldn't doubt we test the high. But it kind of, I and J did what E and F did. Now, here's why they did this. And let me try. It's hard to see because we're in 5-tick increments. It would be better if we're in ones because it would show you better. Now, when I took that F, put an F, I said to the room, I said, I need this to take out the day's low sooner rather than later because all this was shorts, right? They were short here, D's low, E's low, F's low, including me. And I said, if the shorts don't get what they want, and what the shorts wanted was to fill the gap. They don't get that pretty soon. They're just going to give it up. And that's what they did. And that's why I took that loss. But now that's just exactly what happened here. Now we stop the one-time framing down. G's up, H up, I up, J up. Well, just like what happened here, that's exactly what's happening here now. Everybody's long. And what are the buyers looking for? To pop the top. Right? These are just mindless machines. These are just algorithms. These are just traders just day traders going with the trend. We're one-time framing up now. There's no way they're going to close the gap, but they want to see what's above A and B. Well, guess what? If you don't get that, what's going to happen? The same thing that happened here. So what did I do? We come down in K, go back and forth. Back and forth. Now, it was above the 144 simple moving average. I want to see it get below. L opens. We can't take out K's high. I buy 500 326 puts at $1.26. They come in a little bit. I take 100 off for between 4 and 5 cents. They come back up. Now, this is the last of my ammo. I have no ammo left because all these trades have been in my IRA, and that buying power doesn't refresh. So between being long 1,000 calls and puts and everything else, so accidentally, I put in to buy another 400 puts. Now, I wouldn't have been able to buy them, although then again, who knows? Maybe Schwab would have let me buy them because I didn't have enough money in the account. But for whatever reason, I canceled it and reversed and sold the 400 that I was long at $1.26. I sold them at $1.19. And I'm telling you, literally 2, maybe 3 minutes later, this happened. So I ended up losing another $3,000 on that trade by accident. And I really thought that it was all these buyers were gonna finally give it up. I said to the room, we're gonna get to at least value low. Well, we got more than value low. And if I go to a 1-minute chart later, and maybe I will to try to find it, once I made that blunder, we literally just fell out of bed. And they went down to $2. Now, I'm not saying I would have held them to $2, but I would have hopefully have gotten maybe 40 cents out of them, 126 to 166, 176. I would have made back everything I was down on the day and more. Instead, I went out with a big loss on the day. And the reason I'm taking so long to tell you this is because my mental reserve was destroyed by what I tried to do here on the short, what I tried to do here on the long, tried to do here on the short. I was pretty much, I guess, fried. And I'm blaming myself. By taking that trade off, I had no intention of taking that trade off at the time. With one time framing down, it looked like it wanted to just flush. Those things happen. I know it's a long, roundabout way, but look, I'm going to be as honest as possible on here. I tell my traders in my room. Luckily, a lot of traders in my room went short after that blunder and made a good trade out of it. So anyway, I'm sorry that was a long one, but I'm a little frustrated. And so I guess by me talking to you, I'm talking to myself. Let's go over today's destinations. Now, let's keep in mind, as poorly as this market acted in the last 2 time frames, we are still 1 time framing up in all 3 time frames for now. Okay? So right now, we closed at 325.01. But just like yesterday, I'm using L's low as the base of the price probe. So 324.87 is our first destination. We'll see tomorrow if it's accepted or rejected. Then, believe it or not, we have a trend day down. Yes, trend day down after gapping higher and having higher value in 10 wide, way above. They start at 325.38. That's M's high, and they get filled at C's low of 325.44. Above that, we have 10 wide, which is 326.26. Is that it? Yep, 326.26, 10 wide. And then we have today's high of 326.93, and then a huge gap at 332.58. It's still 565 points from February 24th. For the downside, we have today's low of 323.94. Then we have the price spike. That held today, right? We didn't get to it. 323.81 price spike. Then the single prints. 323.51 get filled at 32. Then we had one extra one in the SPY, 323.14. Afternoon pullback low, which happened in F at 322.46. And then the last set of single prints, 322.32 get filled at 14. And then yesterday's low of 320.62. So it's going to be interesting because as poorly as the day acted at the end, I still tell you sometimes M period has to be taken with a grain of salt. And until they take out M's low tomorrow and starts attacking where buyers were yesterday, all this could have been is weak longs flushing out and shorts piling on, especially since the POC could not be lowered. Remains to be seen. Now, I know this is long. I know it's already 15 minutes. I apologize, but if you really enjoy what I do, I appreciate it. And I appreciate the likes and the comments. And if you don't like it, tell me why you don't like it. Okay, charts, monthly. One time framing up for 3 months. Now, here's the important thing. We got out of 323.41, which is last month's high, right? We got out of it. We closed above it today, but certainly not as high above it as we were early in the day. But we're still $1.50 above it with today's close. Weekly, same thing. We got above this 8-week balance. Right now the weekly is up for me. One time framing up 3 weeks. However, we have 3 days to go in the week. We don't want to close back into 323.41 because if you do, even though we're one time framing up for 3 weeks, all we did was stretch the balance and we're back into it. And then same on the daily. One time framing up 3 days. So all 3 time frames, not only are they one time framing up, it's 3 months, it's 3 weeks, it's 3 days. So they are still pretty healthy. But you want to stay above 323.41 and you need to get some better volume. Somebody else I was talking to on Twitter yesterday, they said they don't care about volume. Well, you know what? I care about it. I care about it a lot. Now, maybe on the intraday, well, in the intraday it matters. Maybe in the shorter time frame it doesn't matter as much. But volume matters tremendously because it tells you who you're playing against. It tells you what kind of structure you're building this upward move on. So volume is a huge factor. And it's been really horrible. 57 million today with the after hours still to come. So our last 3 days, where we're one time framing up, 3 days ago was 63 million. Yesterday was 56. Today is 57. Our average is down to 82. That's not convincing, right? This is a huge gap. I told you, unless you get a catalyst in the next time frame in here, that gap's not going to fill easily. Well, we proved that today. So, again, remains to be seen. I hope you had a better day trading today. I can't wait to get back at it tomorrow. Come check us out at camelbacktrading.org. Have a great night, and we'll speak prior to the opening tomorrow.